Hi, Phil Iverson here in Chicago. This video is regarding independent contractor tax returns. It's actually very similar to a recent video I made titled Self-Employed Tax Returns. But because, especially in these days, with so many different types of gig workers and Uber drivers, there's radio announcers, videographers. It's an endless list of types of self-employed independent contractors. I thought I'd make another video and recap some of the items of particular interest. Now, for those that are relatively new, the folks that have been around for a while, they know this, but you are responsible for all of your taxes, and that includes all of your self-employed tax, your Social Security tax. It's a fair amount. Right there, there's a little bit of a calculation, but it comes out to be just about 12% all told. Now, if you were a W-2 employee, your boss would split that with you. The company, they would pay half, you would pay half. But gig worker, you got to do it all yourself. So there's 12% there in Illinois. There's about approximately 5% state tax. So that's 17% there, plus whatever federal tax. So this could be, when you add federal tax, let's take the minimum tax, 10%. That's in Illinois, 12% for Social Security, 5% for state, and 10%. That's 27%. If you make $50,000, you got to pay, roughly speaking, 27, 30%. That's almost $15,000. It's a lot of money. So make estimated taxes when you know you're going to be having to come up with all your own tax money. On a job, on a W-2 job, they take a little bit out every week, and you don't feel it that much. But when you're self-employed as an independent contractor, get your estimated taxes in on time. They're ES forms. That's the name of the form, ES vouchers rather, and they're due approximately every 3 months. 4 of them for the year. Now, generally when we pay estimated tax vouchers, we usually set this year's tax, what we're going to pay into the government, just a little bit higher than whatever the bill was last year. And that makes sure that regardless of how much income you made, there's no penalty for underpayment of estimated taxes. Now, when you've got your W-2, or rather your 1099s, and whatever invoicing that you send out these days, if you get paid from the credit card companies, they'll send you a statement as well. So all these get added together for your income. Where a little bit of the thinking comes in is to extract all of your bona fide expenses for your job. Let's just take an Uber driver. If you're an Uber driver, you've got your own car, you have to pay, your own gas. You get paid. You're making money directly from Uber, so they're transferring monies to you. You've got depreciation on your car that can be depreciated. That means if you have a car, you can either depreciate it over 3 to 5 years. Then you've got insurance expense. You've got all your licensing. What else is there? There's certainly gasoline, tolls. There may be quite a list of other things too. How about your cell phone? They certainly use cell phones as an Uber driver. Any other devices that are connected with that. So getting these expenses out and on paper, it really helps. Now, another item to consider are the forms that are to be used. For most gig workers, it's a Schedule C, self-employed profit or loss from a business. However, some gig worker, in a sense, a farmer maybe, they're not really a gig worker, they're a farmer. It's a special classification. But you do have your Schedule SE, that's your Social Security form. Now, whatever you pay on that form, on that Schedule SE, half of that gets to be deducted on your tax return as an adjustment to your income. I'll give you an example. If you make $100,000 as an independent contractor, you're going to have, is a little bit of a calculation, let's just say $12,000 of self-employed tax. Now, half of that gets to be deducted on your personal return. So you do have the $12,000 in addition to your regular ordinary income, but you've got $6,000 can be taken off from your personal tax return. Other items to be interested in are things like the standard mileage rate. In lieu of taking actual expenses on a vehicle, you can take a standard mileage rate. It's just around 50 cents a mile. Now, with this, you should have some type of record of how many miles you're driving for business. And independent contractors, it does not count any personal mileage, but anything for that's business related. You do have, some independent contractors have meals and entertainment. Generally half, if you're taking clients out, nice dinner, about half of that gets to be deducted. The IRS long ago, they used to let the whole thing go, but folks were having such a good time with that meals and entertainment, they trimmed it back a little bit. Still, it's nice. It's a nice deduction, and taking clients out for a dinner, that's a nice way to keep the relationship good, keep business running along smoothly. If you have an office in the home, that can be a fair-sized deduction. There's a number of rules around that, so I won't dwell on that too long. But these are the types of considerations. You may think about going to the IRS website and pulling down some of their tax information about independent contractors and the self-employed. It's really for if you got just even a small amount of time, it's nice to see what they say directly from the IRS. They give you a bunch of tips about being self-employed and an independent contractor. Again, Phil Iverson here in Chicago. Hope your business is doing well. Until next time.